How do you find daily market opportunities? One of the single biggest challenges in starting out trading is missing out on opportunities. So let's look at that today. Ahoy there, trader. It's Phil, and welcome back to the Anti-Investor Stocks and Options Trading Podcast, where we talk about what really works in this world of trading. And my goal is to give you the right tools, the correct rules, the software to assist you, a community to support you, and if you'll allow me to be a mentor to show you the right way so that you get real results in the fastest and smartest possible way. Now then, how do you find daily market opportunities? I think the bottom line is you need a trading plan. I think that goes without saying. If you don't have one, what the fuck are you doing? Get a sheet together, go and get a trading plan, go and get a mentor, and then you can get on with finding opportunities. That said, focus on quality over quantity. It's not about sitting there for 6 hours a day, pew, 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 like it's a Nintendo, looking for fast opportunities. Initially, I did feel the need to day trade every day and look for multiple trades every day. There's that compulsion to do it, but it generally just leads to poor decisions, over trading, and usually a lot of losses. So if you can kind of skip that, or at least recognize that that's where you're at the moment, just take a step back. Over a period of time, you will learn that it's more important to look for the exact setup, the quality setup that you're looking for, rather than trying to force a trade just because you're at the trading desk. There's 3 trades you can place, so recognizing that no trade is a valid trade decision is the biggest step that you can make in your trading career for long-term success. Next up, you want to understand the market conditions. The market doesn't provide trading opportunities every day. It is going to be essential for your trading strategy to recognize what market conditions are right for your strategy. And eventually over time, you might have multiple strategies so that you can adapt to the market conditions. Again, I talk about my 6 money making patterns: buy the dip, sell the rally, buy range lows, sell range highs, buy the break of range highs, break of range lows. The 2 dark black sheep cousins are counter trend trading. You still need to know what the trend is. So if you can have a mechanism in place to go, okay, what phase of movement are we in? Are we in an uptrend? Are we in a downtrend? Are we in a consolidation? And there's lots of different ways of doing this. There's no single method. But if you go back to the very first episode the very first episode of this podcast, you'll hear me describe my swing trading system. And if you read between the lines, I actually describe how to use moving averages to identify if we're in an uptrend, a downtrend, or if we're in a consolidation. And if you're in a consolidation, then trading the trend is not suitable. If you're in an uptrend, trying to trade bearish trades is not suitable. And if it is, you're looking for counter trend trades. And just recognizing that landscape and the market conditions is going to be, it'll be a game changer for you. And as I mentioned rather whimsically right at the top of the session, is just develop a trading plan. If you don't, I remember many conversations over the years with many traders, and they're describing, one guy springs to mind in Australia many, many years ago now, and he spent 20-30 minutes describing, okay, he's not doing well, and he's not got the results, and he's talking about trades, and we're having a bit of back and forth, and then at some point during the conversation, the penny dropped for me, and I just said to him, do you have a trading plan that's written down? And all I heard was this pregnant pause, and then the lips started flapping. No, came the answer. So he's talking about all the trades that he placed and all the money that he's lost. And, just go back to the previous episode with loss porn that we were talking about. Also, 2 episodes ago, we were talking about loss porn. That's the journey that he was on. He's just trade after trade after trade, there's loss after loss after loss. You've got to ask yourself why. Why are you losing? Do you have a trading plan? If you started a business, a real world business, bricks and mortar, and the first thing that you do is you write down a plan. Some people do it on the back of a napkin, which is fine. It's a great place to start. But there's a trading plan. If you need finance, you go to the bank, you go to finance houses, you go to raise capital. You're going to need some form of trading plan. What is your business going to do to conduct its day-to-day business? You do it in the real world. You take it for granted that that's what you need to do. Why then don't we do that in the world, or why don't most traders do that when they start out in this realm of trading? So develop a plan. My first plan, it wasn't complex. It was when price is above the 100 period moving average on 15-minute charts, I'll buy dips as price comes back towards the 100 period moving average. I'm basically buying the dip in the context of a trend. It evolved over time. That was it. If the moving average is going up and price is above the moving average, I want to be buying at some point. And that's what I did. It was very successful. I did some version of that for the first 12 years of my trading career. What I ended up doing, if we get right down to brass tacks, was I was identifying consolidations, trading breakouts, and then buying dips after the breakout. So I was basically buying the ignition of a new trend for the day or the week or the month. And that's essentially what I spent the first 12 years doing. I don't do much different these days. I've obviously just refined and honed and finessed and fine-tuned things over the years. Next up, be patient. Patience, I'm going to say it again, it's all critical. They're all critical. Everything's critical. You've got to do all of these things. There's no one thing that you can just do. You've got to do a combination of things. And patience is one of them. I remember learning this when I was a young whippersnapper. Learning how to fish. I was a very young angler, and I didn't know that I was learning patience at that point, but it became a very useful transferable skill later on, where the majority of what we do is waiting as traders. The actual act of trading, the click, trade on, order filled, is very minimal. It takes 30 seconds. There's not a lot of trading activity, actual physical activity to be done when you've got a robust trading plan that is as mechanical and algorithmic as you can make it, which is just a fancy way of saying, if this happens, then take this action. When you've got that, you can just check in, check for trades, check out. And between all of that happening, you've got to be patient. You've got to wait for the setup, wait for conditions, wait for the entry, wait for the target, blah, blah, blah. 99% of what we do is waiting. And I think it's that boredom element that causes traders to ultimately overtrade. Is the setup there? Yes or no? If yes, place the trade. And again, I wanted that algorithmic style of approach for my own trading first, because again, like most new traders, when I started out, you want to click the buy button. So just learning that patience is going to, again, help you with the overtrading elements. You'll also start making better decisions when you don't feel compelled to place a trade, and you'll only be looking for those quality setups that we spoke about earlier. Lastly, but by no means least, know when not to trade. Staying in cash and not placing a trade is the best trade that you can place when you're not sure what to do. There's going to be days, there's going to be weeks, there's going to be months where, the markets just look shite. I can't find a trade for love nor money. Don't force it. I remember, again, early on in my trading career, I had this jump from trading for a prop firm to trading for myself. And when it's your own money, and that's all the money that you've got, it suddenly becomes very important to take the best trade. So some of these things I did as a default of going from trading house money to my own money, essentially. And it was a small account by any measure. And I remember those first 2 months very, very vividly. I wanted the first trade that I placed to be what I considered an A+ trade. So I sat and forced patience, looking for that quality setup and waiting for the right market conditions. And I let lots and lots of trades go by because they weren't what I considered to be A+. And it was almost 2 months later that I placed that very first trade, and I quite literally hit the ground running. And from that day forward, I never looked back. And it was just I just wanted to have my best foot forward and, start on a high note, and all those metaphors and analogies. That's what I wanted for that strategy. Again, when I went full time. So that's exactly what I did. I just wanted the best opportunity. And again, it's not a unique thing either. If you go and read one of my favorite books, which is Reminiscence of a Stock Operator, you will see in that book, there's a chapter about that in that book where Jesse Livermore, it's about the life and trading times of Jesse Livermore from the turn of the 1900s. So, more 120 years ago, it talks about this trader. And it's probably one of the best books that you can ever invest in. It'll be the best $12 you'll ever spend. But one of the chapters in there, he talks about he's down on his luck. He's, had some bad luck, and he's trying to get back on his feet. And he's got $500 to his name, which, all right, in fairness, in the turn of the 1900s was a lot of money, but it was not a lot of money compared to he was used to having millions at his disposal. Anyway, but he wanted that grade A trade to hit the ground running, and then it was plain sailing all the way. It's going to set you up for what comes afterwards a lot. It'll set you up a lot better. It'll be a lot easier for everything else that comes afterwards. And again, just having that first trade, certainly from my point of view, having that first trade is the best trade that I can possibly do. The best entry. Everything's in my control. Built. The best entry that I can possibly have. It was magical for me, because it just meant that I've now got a cash buffer in my account that I can start to maybe take the B+ trades. I don't have to just wait for the A+ trades. And again, I probably missed lots of things, a little bit of nervous ninny going on with that, but nonetheless, it was a very good exercise for me to do, because it did everything that I'm describing to you. It allowed me to focus on quality over quantity. It allowed me to wait for the right market conditions for what I was looking for. It allowed me to check, refine, and hone my trading plan, because I had a lot of free time. It forced me to be patient, and I sat in cash until the right moment was there for me to have what I considered to be the best trade that I could possibly place at that moment in my trading career. Identify those market opportunities, focus on quality, understand what you're doing, and again, don't be in a rush to place a trade. Again, if you're not sure, as my old pappy used to say, if in doubt, do noughts, and that's probably the best advice that you can ever have. And if you're not sure, then you're not asking the right questions. You need to go back to your trading plan, and you need to refine what you're doing, because if you're ever at a point where you're saying, is this a trade setup? If you're asking a question, then you've not got enough definition on what you're looking for. You want to be able to go make clear-cut statements. This is the condition. That is the setup. This is my entry. I'm not saying, maybe coulda, woulda, shoulda. It looks like it's kind of going up. Maybe I should buy it. It's very loose and very whimsical. You want to be able to go, this has happened. This is a trend. I am buying the dip. My criteria is this. And then you can place the trade with confidence. And you've done everything that you can do at that point. It's then up to the trading markets, the market gods, if you like, as to what happens next. It's out of your control at that point. You can just, all you're doing now is waiting for the law of averages to kick in, and you're looking for an average profit on an expected average profit on your positive expectancy strategy. Right, that's me. I'm done for the day. Thank you very much for your time and attention. If you need me, you know where I am. You've got the email. You know where the website is. If you've got questions, shoot me a message. And until next time, have a great day. Toodaloo Trader. Bye for now. Keep in mind that futures, options on futures, stocks and stock option trading involve a degree of risk that may not be suitable for all investors. There is a risk of loss in every investment that you make, and it's your responsibility to assess the risks of your decisions. Past performance is no guarantee of future performance. An anti-investor provides educational information and does not provide financial advice.